The Bitcoin ETFs are coming, Larry Fink is sounding off like the GigaChad himself, and gradually then suddenly all the big banks, institutions, billionaires, and even the Wall Street yuppie elite jump on the Bitcoin rocket ship. What exactly does it look like when the collective marketing budgets of all the financial players in the world start selling Bitcoin as part of every balanced portfolio? We're talking the most massive tidal wave of capital smashing right into the world's only absolutely scarce asset. Grab your surfboards, it's time to ride this epic wave. What's up YouTube, I'm Hurley, and today we're talking about the entire traditional financial market warming up to Bitcoin. This year we've seen an unprecedented number of big-name institutional players flipping pro-Bitcoin. To commemorate the biggest and most blatant 180, have a look at this short I cut a few months ago featuring our new pal, Larry Fink.
What I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world.
Is it true that you're building out a cryptocurrency capability?
No.
Don't your clients want crypto exposure?
No, I don't believe any client has sought out crypto exposure.
Really?
Yes. I'm encouraged by how many people are focusing on it. I'm encouraged about the narrative, but I don't believe we should think about crypto as a substitute of currency, but I am fascinated by it as an asset class.
Specifically on Bitcoin, we're a believer in digitization of products, and we do believe it could revolutionize finance. It's digitizing gold in many ways as a hedge against inflation, a hedge against the devaluation of your currency. Bitcoin is an international asset, and so it can represent an asset that people can play as an alternative. The foundation of BlackRock is about hope.
Now, Fink and BlackRock isn't the only billionaire and manager of trillions in assets to make the flip. Between last cycle and now, the change in attitude towards Bitcoin among big-name players in traditional finance has been striking. The incoming ETFs and all the attention and pressure the SEC is getting to approve them is the catalyst for something completely new to Bitcoin this cycle. Institutional adoption is actually here. What exactly does this mean, and what will it look like? We're talking exponential growth. And how many of you want to see this exponential growth reflected in your traditional investment portfolio? How about that massive Bitcoin upside without the capital gains taxes? That's where the Swan Bitcoin IRA comes in. To benefit from Bitcoin in your IRA, all you need to do is set up an IRA with Swan, allocate real Bitcoin to it, allow it to appreciate over time with zero capital gains taxes, and enjoy your retirement. Go to swan.com/retire to learn more. Now, it's important to remember that the BlackRocks and Fidelities of the world are not jumping on the Bitcoin bandwagon for altruistic reasons. They are not trying to fix the money and in turn fix the world. They're doing it because they stand to collect billions in fees. And simply put, the money ain't broke for them. This is the incredibly powerful game theory in Bitcoin playing out before our very eyes. Greed is attracted to Bitcoin number go up like moths to a flame. And just like the Trojan horse of Troy, the greedy wheel it right through the front gates where freedom and property rights for all sneak out in the night to sack the city. Here's a clip of Preston Pish from Pacific Bitcoin a couple months ago talking about his prediction that big banks will begin recommending Bitcoin allocation in the next 12 months following the ETF approvals.
I would say, I think in the coming 12 months, we're going to be, as Bitcoiners, going to be kind of surprised at some of the things that we see. In particular, I think one of the things that's going to surprise us most is I think you're going to actually see a large bank, call it Fidelity, BlackRock, or whatever. I think they're going to actually, I think the ETF's going to get approved. I think you're going to see one of these large banks actually start to recommend Bitcoin as a percent of the standard portfolio for people. And I know that sounds crazy for people listening to that. I think that's happening in the coming 12 months where I could see a BlackRock say, we think it's appropriate for 1% of a person's portfolio to be in Bitcoin.
Oh, and by the way, we have this ETF for you.
And we have this ETF vehicle for you to do it, which I don't think anybody should invest in. I think they should self-custody, buy their own Bitcoin, hold their own keys, hang on to your hats, because I think the next 12 months for Bitcoiners is going to be one hell of a ride.
And this catalyst can be taken further. Lynn Alden, the author of the excellent book Broken Money, which I just finished recently, is incredible by the way, everyone needs to read this book. Lynn did a private webinar for Swan clients earlier this month on Bitcoin portfolio allocation. Here's a clip where she talks about where this shift in sentiment towards Bitcoin might lead.
When the SEC and BlackRock bless this asset, you start to get weird if you're like an RIA that does not like have Bitcoin exposure. you're clearly like a dinosaur at that point. Like you're like, instead of being the cautious safe one, you're now like weird. Like it's gotten weird at this point, right? So there are like qualitative signaling mechanisms that go along with these more mechanical access points that are relevant.
Just imagine the army of independent financial advisors recommending even just 1% allocation to Bitcoin to all their investing clients. These smaller banks and fund managers tend to follow the big boy trends. So if ETFs are approved and big banks start recommending it, you better believe all the smaller guys will swiftly follow suit. Here's another clip from the same webinar where Lynn talks about the ETFs also opening up billions of dollars in trapped capital.
Now, what a spot ETF does is it improves the gateway from very large pools of existing trapped fiat capital to get exposure to Bitcoin and take some supply off the market, off of, kind of liquid exchanges, and drive the price up. So I do expect it to be a positive catalyst for price. There's like trillions or tens of trillions of dollars of capital that is like kind of stuck in these silos, certain retirement silos, tax advantage silos, regulated silos, pension silos, endowment silos, whatever the case may be. If I have $10,000 of like taxable spending money and then like another 100,000 of like more retirement money, and it's kind of in these silos, I'm saying, okay, given this money, I'm not going to take it out of those silos most likely. And so how can I best optimize the money that I have in these silos? And of course, I would want to have some Bitcoin exposure if possible.
I just love how she words this. The Bitcoin ETF improves the gateway from very large pools of existing trapped fiat capital. Lynn is talking about the massive amount of fiat locked up in pensions, 401ks, retirement funds, endowments, etc. Once these spot ETFs start trading, we unlock trillions of dollars of previously trapped capital that can now flow right into Bitcoin. Back to the greed at play here. The ETFs trading make the price go up as BlackRock and other funds buy Bitcoin to fulfill demand. The more the price goes up, the more money BlackRock and these funds make in fees. The more they make in fees, the more they utilize their bottomless marketing budgets and army of investment specialists to shill Bitcoin to more customers to again make even more fees. And this is how the game theory in Bitcoin works. It's like an endless cycle where the human propensity to look out for one's own self-interests also strengthens the network. BlackRock makes more money the higher the Bitcoin price goes this cycle. And the higher the Bitcoin price goes this cycle, the more regular working class people will begin to learn about Bitcoin, as number go up is the best motivator. To really understand what this could mean for the price moves, have a look at the video I did a few weeks ago on the Bitcoin bull market multiplier effect. Link is in the description and at the end of the video. Now, some people think the ETFs are bad for self-custody. I tend to think those who will be buying the ETFs this cycle otherwise would not be buying Bitcoin from an exchange and holding the keys themselves. As Lynn puts it, this is largely unlocking capital that otherwise would not have the ability to flow into Bitcoin in the first place. I believe these ETFs will become the catalyst to a whole new wave of regular people learning about the value proposition and financial sovereignty that holding real Bitcoin represents. And these are the people that will become the next round of convicted holders that set the base for the next cycle. In other words, everything is good for Bitcoin. So what do you think? How will this era of institutional adoption play out? Leave a comment with your thoughts, like this video, and subscribe to the channel for more content like this. And for more information on where this kind of institutional adoption could lead the price, check out my video on the Bitcoin bull market multiplier effect. Also, check out the one from earlier this week on the current attacks on Bitcoin privacy and self-custody. Until next time, Bitcoin is peace.